Hi there, welcome to the Pruskop podcast. My name is Megan Prusko, and I'm a residential and multifamily realtor here in Edmonton, Alberta. Today, we're going to go through the monthly market stats covering May, and then afterwards, we're going to break out into a little bit of a story time that I'll share with you the newest CMHC MLI Select changes. Yes, there are more changes that they've just made. And then I'll also tell you about a couple of my deals that I've had recently so you can see behind the scenes what it looks like for either buyers or sellers and just the general temperature of the market here in Edmonton. For those of you that are only here for the data, let's get into it and then we can talk more later. As I said, this is released every month. This is covering May, and this is put together by the Realtors Association of Edmonton, or what we call RAE. Let's start with the average selling price. That's what most people want to know, starting with the category of all residential. So this includes apartment condominiums, townhomes, semi-attached, and fully detached homes. Altogether, if you are looking to purchase a property here in Edmonton, you can expect it to be right around $464,000. Month over month, all residential has gone down 1.4%, but it is still up 5.2% year over year. If we move down to detached homes, once again, month over month, we've gone down just a smidge by 1%. Year over year, we're still up 6.2%. So if you bought last year, your house on average should be up at least 5% from what you bought it for, if that's something that you're looking at right now. The average price for a detached home in Edmonton is $580K. If we bump down to semi-detached, this would be like a half duplex to give you a really simple example. On average, the price is right around $440K. Month over month, this has gone up 1.1%, and year over year up 6%. Lastly, or second to last, we have townhomes, so row townhouses. On average, the price we're looking at is $307K. We've gone down for price 2.7% month over month, and year over year, we have still gone up 4.3%. Apartment condominiums, on average, you can expect the price to be right around $214,000. Month over month, we have also gone down 2.1%. Year over year, we are still up 3.4%. Now, something that you may be thinking looking at this is month over month, it's gone down, let's say 1%, maybe 2% on average for all of these categories. But I think this has a lot more to do with how many listings have hit the market. So I think we were very much in a shortage, and we still are, but not as much. As we approach the summer months of July and August, this is when we are going to see the most amount of inventory. This is when most people are able to move or want to move, especially people with kids that are in school. It just doesn't really make sense to move in beginning of June. It makes more sense to move in July or August, and then the kids can start potentially at a new school or just not interrupting their schooling for September. Something to note here is that this data doesn't just include Edmonton. This is the surrounding areas as well. So you can see down here, we got Strathcona County, Sherwood Park, Parkland, St. Albert, Spruce Grove, Leduc, Fort Saskatchewan, Beaumont, Sturgeon County, Stony Plain, Leduc County, Mordenville, Devon, Gibbons, Kalmar, and there's more. Redwater, Bon Accord, Bruderheim, Leal. I don't even know where Legal is. Oh, Thornsby. Okay. And then Warburg. So there is more information than just what is happening within the Anthony Henday ring. For new listings this month, we have just about 5,000 more listings this month, so 4,900. This is a 27.8%, so 28% increase month over month of new listings hitting the market. This is what we need to see with the amount of demand that we have right now. We need more listings. It's getting so competitive and frustrating for buyers right now. So hopefully these new listings hitting the market will maybe level it out a little bit. I know that I'd like to see that on the buying side. On the selling side, I'm loving this environment that we're in right now because depending on how you price and what your strategy is, you're almost guaranteed to go into multiple offers if you're smart about it and you're in a decent area. We have 2.2 months of inventory left. What this means is if there wasn't a single house from today moving forward that gets listed, we would only have enough inventory to last 2.2 months before everything gets bought up. Theoretically, of course. The last thing I really like looking at here, and I actually was a little bit shocked by this, not in a bad way, but it is interesting, is the average days on market. If you look here and you've looked at the previous months, there's almost always a 10-ish day gap between how fast it takes to sell this year compared to last year being longer than this year. But we're starting to see that gap close a little bit. This may just be because the weather is warming up. So last year it was also moving this quickly. So something that I'd make a speculative opinion on would be that maybe people got burned last year by not acting fast enough. So they were purchasing a lot quicker in kind of the colder months or in the new year than waiting for summer. They're like, no, I don't want to compete in the summer months again. Let's just get in early. So there was more aggressive buyers in the new year this year than last year. That would be my opinion on this, but let's break into the numbers. So for just detached homes, so just a normal house, last year it took approximately 33 days to sell. This year it's 27. So that 10-day gap has kind of shrunk to 6 days. Semi-detached, on average last year, it took 29 days to sell. This year it's taking 25 days. For townhomes, this one's really cool. Townhomes last year on average it took 28 days, and this year on average it's taking 27 days to sell. So pretty much neck and neck, I would argue. And apartment condominiums on average, last year it was taking 42 days, but this year it's taking 40 days. So tightening up for sure. That's not good, that's not bad. It's just information. Do with it what you will. That summarizes the bullet points for the market stats of this month. So I'll stop sharing and we'll break into story time. All right, so I've been super busy recently. That's why I didn't do a market stats recap for April because I was just slammed. But here I am covering May for you. Let's go over first and foremost the CMHC changes. This is what most people are going to be interested in, so let's dive into it. CMHC, I made another video about this already, but they're kind of annoying. They don't give proper information or updates on what these decisions are before they implement them. This time is nothing new, and it's frustrating for a lot of buyers, builders, lenders, because there's no source of information that people can look to confirm directly from CMHC. They don't update things fast on their website. They don't send out brochures or information pamphlets. It's just what lenders are trying to put together by connecting the dots, what they're seeing happen to certain files. And then it's just speculative. It's like, well, it's looking like this is happening now. So two changes that are newer now with CMHC is they're asking for these standard infill projects that are they're usually 4 units up, 4 units down. They look like townhomes and they're infills. What CMHC is now saying is that they want each unit to have their own electrical, water, and gas meter. And if you're early on in construction, that's not a huge deal. If you haven't, demoed the old house on there already, or you haven't laid the foundation already, or you haven't done framing already, then you can probably make that work. Something that some builders are having problems with is there isn't enough room on the exterior to put those meters because there are code requirements of how far away exhausts have to be, for example, from windows. So you really got to be smart with where you're placing these meters on the exterior and is there even room for it? If you do not have additional meters for each unit, you can still get MLI Select funding, but and I don't know if this is 100% true, but I was told by one appraiser that CMHC is going to be reducing your appraisal value by 2%. Whether that's true or not, I don't know. That's just speculation. That's all I have to offer you. Another thing is on the underwriting side of things, if you do not have separate meters for each independent unit, then you as the landlord are going to be the one responsible for paying 100% of the utilities. Of course, you raise your rent to include utilities and then you pay out of the profits of the rent. So it's not directly coming out of your pocket, but it does need to be included in the rent and then you'll pay for it that way. The newest thing that CMHC has said is they no longer are accepting these buildings, same thing for up, four down, infill townhouse style. They're no longer accepting these buildings to have exclusive mechanical rooms in the basement. So they want common area mechanical rooms. Typically in these buildings, not all of them, but maybe 50-50, You go to the basement, walk through the basement suite door, and then the mechanical room's inside. What CMHC is changing is they want you to walk down the stairs, have the stair landing at the basement, and then you go through door number one to go to the unit, and then go through door number two to get to the mechanical room. So they don't want mechanical rooms to be inside the units anymore. Whether this is going to make or break your financing, I don't know about that. Please speak to your lender, mortgage broker about this. But that is something that I hear that they are pushing to get done. And when I first told the builders about this, that I have clients, buyers offering on these properties and have pending on these properties, at first I sounded crazy. They're like, Megan, nobody's talked to me about this. This is brand new information. Are you sure this is true? Are you sure this is real? This is going to be a lot of work for us to redraw or potentially reframe the layouts. And I just told them this is the information that I have and the source that I have is very credible. So take take this with, you know, the information that I'm giving you right now. And then of course, a couple days and a couple weeks later, the builders came back to me and was like, "Yep, I heard this as well." There was even one builder I spoke to. He had a client that was buying two properties, one of which was fine, they could leave as is, but the second one, they just finished landscaping, which is the last step in all of construction for these properties. And they weren't able to put a larger amount of money down, like they weren't able to meet the lower LTV. They have to get 95% LTV. That's all the financials that they have available to them. So the builder actually had to go in, rip up the beautiful landscaping, rip up the side of the house, rip up the basement layout, and fit the second hot water tank in the mechanical room to have a second water meter. And yikes, I feel bad for those people. But hey, they made it work. What we have noticed with MLI Select changing the rules here is there is some form of hesitancy on the buyer side, especially with pre-construction. Pre-construction dates are so far out. Like the ones I'm working on right now are going to be finished March of 2026. So just about a year from now, a little less than a year from now. So there's a lot of time for potentially something to go wrong. And a lot of people don't have 25% liquid or available to back into a conventional loan if, shit hits the fan. So those people are, taking it timid. I am working with a buyer right now that does have that 25% available to him. So everything's looking fine for him to get 95% LTV. But worst case scenario, if it does come down to him going into a conventional loan, he's still going to be okay. He's not going to be as happy about it because more money's going to be locked up, but he's not going to be losing his deposit, which is good. We have seen some people kind of shift towards legacy buildings and just go directly for a conventional building. Usually these buyers are wanting to do value add, so they'll find something typically below 2 million. They'll get it through a conventional loan, 25% down. There's no insurance on it. Then they'll do the renovations either unit by unit or all at once. And then after that, they'll refinance, either pull the equity out, or instead of refinancing it, they'll just sell it and flip the property essentially. But there is something to say for people not having a lot of confidence in MLI Select because they keep moving the goalposts. So a lot of people are just saying, screw MLI Select altogether. I'm just going to play it safe and go into conventional. And, the only real drawback with that is you're losing 20 years of amortization and you're also, I wouldn't say losing 20% equity, you're just putting 20% extra down than if you were able to successfully go through MLI Select. So more money locked up for a good amount of time. Other deals that I've worked on this month on the residential side of things is there was a non-legally suited bungalow in the Mill Woods area, really close to Grey Nuns. That one, we were only listed on the market for a handful of days, and I think it would have sold, not sold, but gone pending within 2, 3 days of us going on market had we not done an offer review date. So you'll see this a lot on listings that are competitive, either in price, location, or condition. Is it'll go on the market, let's say Thursday, but then in the private remarks, which is this little section of MLS that only realtors can see, it'll say offer review Tuesday at 6 p.m. It could be anything. But what that means is the seller's not going to make a decision until Tuesday at 6 p.m. So most people will wait on putting an offer in until the very end, almost every time, because they want to see what the competition is like before they submit their offer. And that's what happened with this one as well. It was just crickets. We had so many showings, but no offers were coming in until that afternoon slash evening. And then we had three in a row, picked one of those three, and we were off to the races. They just removed conditions on that, so we've gone firm. So I can tell you we listed at 399 and we ended up selling for a final price of 419,500. I'm super happy for those sellers. They did a great job maintaining the home and it really paid off for them. So congrats to them, and now they're moving on to even bigger investments. Awesome. The next seller that I was working with, she has this cool, it almost looks like a townhome, but it's not. It's an actual house, but it's in the subdivision of other smaller houses that look cookie cutter just plopped down there. So that's why it looks like a townhouse, but it's not. And she has tenants in that property right now. The tenants have broken terms of the lease a couple times, so she decided to give them, I think, 45-ish days notice when legally she only needs to give them 7 days notice. But those tenants did not move out at the end of those 45 days, so she got a court order saying you have to go in 7 days. End of those 7 days, they still didn't budge. So now they have an actual court date where both of them can go to RTDRS and sort that out officially. And as soon as that goes well, because she has a ton of paperwork backing her case up and she's looking like she's in a good position, then we will have possession at the end of this month. I know she had a frustration because she's been, in her opinion, like a very lenient landlord. And I've heard other landlords kind of go through this thing where they don't want to be jerks. There's a stigma of landlords being jerks out there and taking advantage of people. So she was lenient with them paying rent late or having pets, or we even found cigarettes in the basement. And she's like, you know what? They're a young family. Just, I'm not going to pick a fight about this. But enough of these little things have come together. And now that she's trying to sell, it's a lot that she's dealing with right now, but I have hope that she has a really good case to back her and that she's going to be successful in her efforts and that we can have possession at the end of this month. I had the Lamont property sell. So Lamont is this little town that is northeast of the city, just past Redwater, or sorry, not past Redwater, past Fort Saskatchewan. It's very much an agricultural town. There's a ton of farms there. And in Fort Saskatchewan, there's a bunch of plants. So if you live just past of Fort Saskatchewan, you're most likely going to be in an industrial area. That's kind of the tenant profile that lives out there. But that one finally sold, which I'm really happy for. There's a young family that's moving in, and it's right across from a school, and they have grandparents that live very nearby. So I'm excited for that family, and I'm really happy for my seller that they got a good price for the property, and it's just a triple win. Everybody's happy. That's what it should be. I have a buyer that's purchasing a multifamily pre-construction. He's the one that has a good amount of money liquid, so he's safe no matter what, and I'm really excited for him. He's going to be going unconditional at the end of this month. We are prepped and ready to go. Last step was to get the appraisal done prior to condition removal. We get the appraisal done just to make sure that a third party agrees that the property is worth what we're paying for it. Let's say he was paying, I don't know, $2.3 million, or the purchase contract said $2.3 million. If the appraisal comes in at $2.2 million, so 100K short, that means that either, how should I say it, a third party thinks he's overpaying for it, it's not worth it. And on the financing side, that means that he would get a maximum loan for 2.2, not 2.3. So if he wanted to proceed with the sale, he would have to cover that 100K difference, usually with his down payment. And yeah, that's where you get an appraisal done, just to make sure before we go unconditional that the property is worth what you pay for it. Very important. I have another buyer that is going through a conventional loan to buy a 6 unit in Kenora. It is a legacy build. So that one's really cool. 4 out of the 6 units have been updated already. So that one is really neat. Imagine a side-by-side duplex, and then it's a total of 2,000 square feet above grade. So the main floor, if it was all one building, is 2,000 square feet. But since it's split in the middle, each main floor unit is a 3 bedroom and just over 1,000 square feet. It's big. I was actually really impressed with this place. So you have 2 units on the main floor. You have a 3 bedroom, and then in the basement of each half duplex, around 500 square feet per unit. There's 2 units. So think there's one bachelor and three one beds. So each half has three units. Main floor is one, basement is two, front and back. I was surprised in a great way with how much space there were in these units. I've seen quite a few of these converted side by side duplexes or fourplexes that get turned into commercial, which is five doors plus, and they're usually really awkward layout and it just doesn't feel cozy when you're in there. So when I'm in those units, I just think to myself, what kind of good tenant would want to live here? And probably slim pickings, but this one, great square footage, very well maintained property, giant double bay garage in the back that's split down the middle too. So they can rent that out either to the current tenants or a tenant that doesn't even live on the property. I do know some people rent out the garages separately. For a double bay garage, you can get anywhere between 150 and 250 for storage. I've spoken to two sellers that rent them out to some kind of contracting company. One of them was a bricklayer, and I think another one was landscaping. So they just rent the garage because it's cheaper than going to Centennial Storage or something. And that's a unique way that you can get more cash flow out of your property as well. The main floor or basement tenants don't want to increase their rents to include the usage of the garage. You can just find somebody else that doesn't even live there and rent it out as almost a unit. Obviously, no one's living in there, but just for storage. The last deal that I'll talk about here is this property in the south side. It is residential. And on that property, the basement is fully finished. It's not a legal suite. There's not a stove in there, but there is a kitchen, a bedroom, and a bathroom. It was developed for the grandma to live in originally, but grandma moved out, and now the kids always take turns. The teenagers have taken turns living in the basement. And we've listed that one. We went pending a couple days after being on the market. The first deal fell through. The deposit was sent in, we were on time, but it fell through out of nowhere, and you can only control what you can. So before we actually went back as active on the market, I reached out to the other realtors that offered on the property and I said, hey, just so you know, this is about to go back active on the market. Do you guys want to, revive your offer and jump back on it? And this is why having a realtor that's really proactive and can forecast worst case scenarios before they come a reality is really important. So something I was telling the seller, because they're anxious, of course, anybody selling or buying is going to be a little bit anxious. It's a really, really big deal, right? So what I told her from the beginning is like, this is how it can go. Obviously, I hope that it doesn't go this way or in these directions, but just so you're aware, worst case scenario, this is what it looks like, and this is what we are going to do to protect you and protect the deal and make sure that we still have a satisfactory ending to this story. And good thing I did, because when it did collapse for reasons outside of our control, she was like, okay, well, that just means that we're going into this avenue. I was like, yep, and I've already acted on that. I've already reached out to those realtors. One of them said that they're most likely going to be reviving their offer. So we should be pending tonight, even though it just collapsed this morning. So that's why having a realtor that really breaks stuff down for you, you have clear plans of action because things don't always go according to plan. Real estate, you can't control too much. You can do a lot, but not everything. That's it. That's all. That's my stories for this month. And yeah, thank you so much for sharing your time with me. I hope that you learned something and that this was entertaining. If you did, please like and subscribe. It goes a super long way. Thank you very much for sharing your time with me. I hope you have a fantastic day. Bye for now.